Saudi Arabia is not just a country but the king of the global energy market. The economy of the whole world depends on its oil supply. If it increases oil production, prices may fall, and if it reduces, inflation may skyrocket. This is the reason why America wants Saudi Arabia to extract more oil so that global inflation remains under control. But now, Saudi Arabia is not listening to America. It is producing oil on its own terms, due to which the prices of crude oil may go up. This will affect the whole world, including India. Petrol and diesel will become expensive, the value of rupee may fall, and the price of everything may increase. Not only this, China and Russia are now coming closer to Saudi Arabia, due to which the global balance of power may also change. So is Saudi Arabia now challenging America? What does this mean for India, China, and what will be its impact on oil prices? Watch the full video to know the answers to all these questions. Trump has clearly told Saudi Arabia and OPEC that he expects global oil prices to decrease to a great extent. He claims that this step will be the first and decisive step towards ending the Russia-Ukraine war. His strategy is simple: reduce oil prices to avoid the threat of war against Russia. Trump is using the strategic partnership and financial investment between the US and Saudi Arabia for his own benefit. He has asked the Saudi Crown Prince to invest $1 trillion in the US, which has been described as a part of his comprehensive economic and geopolitical plan. Trump's plan to reduce oil prices is not limited to hurting Russia only. There is a big domestic agenda hidden behind it. Inflation in the US is rising once again. The Consumer Price Index, CPI, increased from 2.7% to 2.9% in December. The rising cost of living has put a lot of pressure on the common people. Trump believes that reducing energy prices can be a solution to this crisis. Apart from this, Trump has also demanded reduction in interest rates from global central banks. His thinking is that if global central banks reduce rates, then the US Federal Reserve will also get a chance to reduce its interest rates. This will reduce the inflationary pressure on the US economy and will support his economic agenda. Trump has primarily focused his efforts on Saudi Arabia, but his administration has also attempted to exert pressure on China. They have urged China to push Russia toward a peace agreement. Though achieving this will be no simple task, the bond between China and Russia is exceptionally strong, leaving China with little incentive to abandon its ally. In fact, China is reaping significant economic advantages from its access to inexpensive Russian oil, particularly amid the current volatility in global energy prices. Thanks to their robust trade relationship, China enjoys substantial discounts on oil, gas, and other energy resources from Russia. This partnership is mutually beneficial. Russia secures a reliable buyer to sustain its oil and gas exports, while China gains access to affordable energy, which fuels its industrial growth and development. By purchasing oil at reduced rates, China is able to lower its production costs, bolstering its economy. Additionally, this arrangement enhances China's potential to leverage these resources for strategic advantages in the international market. On the other hand, despite the numerous economic sanctions imposed by Western countries, Russia's economy has not weakened as anticipated. Instead, Russia has managed to stabilize and even improve its economic situation. In December 2023, Russia generated over 4 trillion rubles from oil and gas exports, marking a 28% increase compared to the previous year. This growth demonstrates that Russia's energy sector has not only remained stable, but has also seen a rise in revenue. Several factors have contributed to this resilience. Firstly, Russia has shifted its energy exports away from Western nations to other countries, particularly China and India. These nations have shown a strong interest in purchasing affordable energy resources from Russia, providing the country with a new avenue to boost its income. Additionally, Russia has adapted its energy export strategies, increasing trade with countries unaffected by Western sanctions, which has further strengthened its economic position. Beyond energy exports, Russia has also achieved stability in other sectors of its economy. The country has reinforced its domestic supply chains, ensuring a steady flow of essential goods within its markets. Moreover, Russia has made significant strides in agriculture, manufacturing, and expanding its international trade partnerships during this period. These efforts have collectively enabled Russia to mitigate the economic pressures caused by sanctions and maintain a robust economic footing. This clearly indicates that the impact of Western sanctions on Russia has diminished. Despite these sanctions, Russia's economy remains resilient. with oil and gas export revenues even showing an upward trend. Russia has demonstrated its ability to sustain its economic stability and continue on its chosen path, proving that it can withstand external pressures. The question then arises, why would Saudi Arabia agree to Trump's demands? The likely answer is that it won't. Saudi Arabia has its own economic priorities, including addressing a budget deficit that accounts for 3% of its total economy. To manage this, the kingdom must carefully balance oil production levels and pricing. China, Saudi Arabia's largest trading partner, plays a crucial role in this equation. China is not only the primary buyer of Saudi oil, but also a major supplier of goods to the kingdom. Given China's growing demand, it is in Saudi Arabia's interest to maintain higher oil prices. Additionally, the cost of oil production in the U.S. is significantly higher than in Saudi Arabia. While American producers extract oil at $70 to $85 per barrel, Saudi Arabia's production costs are as low as $10 per barrel. If oil prices drop too much, U.S. producers could face losses, which is why Trump is pushing Saudi Arabia to raise prices. However, this is a complex issue for Saudi Arabia, as it must balance its own economic interests and its strategic relationship with China. Lowering oil prices to benefit American producers is not a straightforward decision for the kingdom, as it could jeopardize its financial stability and diplomatic ties. Therefore, Saudi Arabia is unlikely to fully comply with Trump's demands and will instead make decisions aligned with its own policies and interests. Trump's overarching goal is to establish America as a dominant global power in energy and production. His vision includes replenishing strategic oil reserves and leveraging energy exports to capture global markets. However, this plan is fraught with geopolitical uncertainties and economic risks. Trump's recent announcements and economic policies, whether they involve lowering oil prices, imposing tariffs on international trade, or pressuring China and Russia, appear to be high-stakes gambles. These actions could have significant repercussions. While they may resonate with his supporters, they are also likely to face strong opposition from the rest of the world. In the coming months, it will become clear whether Trump's strategies will achieve their intended goals or instead create new challenges for the global economy. If you found this analysis insightful, please like and subscribe to stay updated with all our future content. Thank you for watching.